Over 20% return for over 50 years. How did Warren Buffett achieve this? In this video, you will be learning 5 secrets how he did it and how you can apply the same in your own investment. I am Harry Hamann from H2 Intel, helping you succeed with investing. So how did Warren Buffett achieve those spectacular investing results for such a long period of time? And when I dig deep into his background and his style, I can identify 5 secrets that he used in his own investing to truly bring him extraordinary results. And I also recognize that I apply some of the same things in my own investing. Secret number 1 is focus. Warren Buffett really focuses his investing activities to a few sectors that he really truly understands, and he ignores all the rest and he just focuses on those activities. Now, if you look at the general investors today, they usually buy some stock index ETF, which is not wrong, but if you buy all of the companies in an index, this means you will get average market returns for stocks. That could mean, for example, 8% return per annum. Now, if you want to achieve 20% like Warren Buffett did, obviously you cannot just buy the index. You need to focus your activities and pick a few sectors, and within the sectors pick the best companies, and that is exactly how Warren Buffett did it. Secret number 2 is quality. Warren Buffett really focuses on high quality of the companies. He's not buying any trash company just because it's cheap. He wants to find high quality businesses, and one factor regarding quality is, for example, the management team. So he really digs deep and tries to understand, is the management team world class? Because if it is world class, they can, even if the company is right now not doing perfectly, the management team can have the ability to turn it around if they're really good, and that's what he's looking for, top management teams. Success secret number 3 of Warren Buffett is value. This is really a hallmark of his investing style, that he tries to find businesses that trade under their true internal value. This means the market price that you pay today is less than the true potential of the business in the future. And he looks, for example, of course, at fundamental company numbers like the balance sheet, the income statement, the cash flow statement, and so on, to determine, is there a higher value of the business. And this is really also dependent on market cycles. So, for example, in a correction, when all the stocks go down, it is more likely that you can pick a bargain. And value investing is really the hallmark of Warren Buffett's investing style. Secret number 4 of Warren Buffett's success is a long-term mindset. So this guy is not short-term focused at all. He thinks in years and years and years, and he usually buys to hold his stakes in public equities. And you just have to ask yourself, can you plant a tree and have it grow tall in 1 week? And the answer is no. It takes time for plants to grow, and it takes time for businesses to grow, because businesses, they have a strategy, they want to implement it, and it just takes time to manifest the results in reality. And this is really very important for him. Long-term mindset, thinking in years and just waiting for the business to grow. Secret number 5 of Warren Buffett's success is that he aligns his investing style with his own personality, and that is true for all great investors, not only Warren Buffett. And what it means is, if you think about people are generally completely different. They have different skills, they are good at different things, so it makes sense that for some people a certain investing style makes sense and they excel at it. And for other people, they cannot do anything with that investing style. They need to have a completely different investing style that is aligned with their own unique personality. And this is exactly what Warren Buffett is doing. All of the factors we talked about, like value investing, long-term mindset, and so on, are exactly traits that his personality is very good at, and that's why he's getting a lot of investing success with that. You can characterize the investors according to different styles. For example, some investors are short-term oriented, some are more long-term oriented. Warren Buffett, for example, is very much long-term oriented. He really thinks in years, probably 5, 10, 15 years. So it's very unusual that way. Another trait of investors is, for example, if they are relying on their intuition or if they're using a lot of math, a lot of numbers to justify their investing decisions. Warren Buffett uses, of course, a lot of math. He digs into the balance sheet, the cash flow statements, the income statement, of course, of the companies very deeply, and he tries to understand the true internal value of the business. Another trait investors have is, for example, are they aggressive risk takers or are they very conservative and try to avoid risk? And Warren Buffett clearly goes into the category of avoiding risk. He really wants to find high quality businesses that have a lot of potential and a high probability to grow in the future, and that way he tries to avoid a lot of risk. Some people have a very broad investing style and some really focus their investing activities to a few key areas, and Warren Buffett clearly is very focused. He only invests in stuff he knows, and that's how he's gotten investing success. And again, aligning your investing style with your own personality is very important in investing. Warren Buffett does this really well. And there are also a lot of books around this topic from Jack Schwager, Market Wizards. And in that book, he really describes how different investors have completely different investing styles, some of the best in the world, and how they use this to their own advantage, and you can do the same. And if I look at my own investing style, I recognize that I still use all of those secrets that Warren Buffett uses in his own investing myself. And why is that? Because these are just some timeless principles that bring a higher probability to get investing success. For example, although I have a very broad investing style, investing in a lot of different asset classes like public equities, private stocks, real estate, crypto assets, bonds, commodities, and so on. Within each asset class, I very much focus, so I never buy the index, I always focus on a few sectors and then identify the best businesses in that sector or the best things in that sector, and that's how I focus my activities and get above average results. Regarding quality, especially for private stocks, where usually for young startups, for example, there is not so much quantitative data. It's a young company, they don't have maybe a lot of revenue, a lot of numbers to go by. So you have to rely on qualitative factors, and one very important qualitative factor is the management team. And from the management team, you can quickly see if there's a higher probability of success by investing in this company. For example, maybe there's a first-time founder, and he does not have prior experience compared to now a 3 times founder with 3 successful exits. So he built 3 successful businesses already and sold them. So this is already an indication that there's a much higher quality management team in place, and that increases your probabilities for success, of course. Regarding value, I always try to understand what is the true potential of the business and try to come up with a rough figure. You can use a lot of math behind that, but for me it's important to get the rough number and to justify this with some basic math. And there are different ways to evaluate these businesses. For example, discounted cash flow analysis. You can use multiples for that. You can use absolute numbers and so on. But the important thing is you have to have a rough idea, and that's what I'm doing myself as well. What is the true value of the business? And I compared it to the price. Usually only during market corrections, where I understand there is now a higher probability that my entry will be profitable in the future if the current market price is well below the true value that I see. What I also use is having a long-term mindset. So by thinking in years, actually you avoid a lot of mistakes, because if you do a lot of short-term actions, a lot of trading, you tend to make some mistakes, and that will cost you dearly. And by holding long-term and just waiting, you avoid all of those mistakes and you can sleep much better. So for me, this has proven very beneficial. Regarding investing style, although I am invested in completely different companies in different sectors than Warren Buffett, actually I still use all of his investing secrets myself in my own investing to some degree. And this is quite interesting because it just tells you can learn from other investors that may be investing in completely different things. You can learn a lot from them, and usually the very successful investors that have done it for multiple years very successfully themselves. These are the people you can learn a lot from, and I also would like to encourage yourself to just learn from those guys. Hope this is valuable to you. Until next time.